Hello and welcome to the market update video with myself, David Madden. It's been yet another difficult session for the US dollar, following on from the heavy losses that were seen last week. Just to recap, last Wednesday the Federal Reserve carried out a dovish hike where they lifted interest rates by 0.75%, meeting expectations, but they also suggested they might look to scale back the size of future rate hikes. Then on Thursday we saw the latest GDP numbers from the United States. They pointed to a contraction of 0.9% in the second quarter, pushing the United States into a technical recession, and that really sped up speculation that the Federal Reserve might look to scale back the size of future interest rate hikes. Hence why we saw a fairly sharp move to the downside in the US dollar late last week, and that negativity has spilled over to this day's session as well. So because of the decline in the dollar, we're seeing a decent rally in euro dollar, pound dollar, and also the Australian dollar versus the US dollar. Looking at equities, keep in mind we had a strong finish to Wall Street last week. In turn, that positive sentiment got carried over to the European session this morning. Broadly speaking, we're seeing modest gains across European stock markets, whereas the US, we have seen a bit of a pullback. Keep in mind, they did finish on a very strong note last Friday. At the end of last week, we saw the UT 100, the Nasdaq 100, hit its highest level since early May. Looking at metals, things are a little less exciting in metals. We're seeing a modest, a very small rise in gold and a fairly modest gain in silver. It appears the weakness in the dollar is helping the two metals.
Last Thursday, the US economy entered a technical recession, and with that, some traders took the view that the Federal Reserve might look to ease up on the rate it's hiking interest rates, and in turn we saw a sharp move to the upside in stocks. Last Friday, the US 500 hit its highest level since early June, which really underlines how bullish the recent upward trend has been. While the market continues to hold above these three simple moving averages, it's likely the more medium-term upward trend will continue. A further rally from here could see a target 41.44, and a break beyond that could see a target 41.89. If you take a look at the price action in the past 8 to 12 hours, we can see it's retreated from its recent peak. Looking at the MACD indicator, we can see that momentum has swung from positive territory to ever so slightly being in negative territory, indicating that the bears are now marginally in control. If you do see a continuation of the short-term downward move in the US 500, it might find support from this simple moving average here, which comes into play at 40.69, and a break below that could see a target this zone here at 39.92.
Turning our attention to oil, we've seen sharp declines in WTI and Brent crude. In fact, WTI is down over 3%. This is ahead of the all-important OPEC Plus meeting on Wednesday. A couple of sources that are connected to the group said that the possibility the group might look to talk about having a slight increase in production from September, and just that very chatter of the possibility of raised output has put major pressure on both WTI and Brent crude.